This conference will now be recorded.
All right, good morning, everybody. It is May 25th. Beautiful May day today, and hard to believe we're almost into summer. Summer starting next week, or excuse me, next month, and getting closer to the end of the school year, and it's a beautiful day. To talk about what's happening in the market, you're hearing a lot of stuff going on right now. I know the economy is in everyone's head as things are all over the board. Interest rates creeping up, inflation definitely up there, gas prices way up, and we're kind of wondering, and the experts are talking about what's happening with housing. We know housing prices have gone up tremendously, and so people are starting to say, are we going to have another housing bubble? And the experts are saying that's not the case, and here's why. So if we look at what has happened in home price appreciation since World War II, let's look at historically what's been going on with our housing market across the country. And the reason why we go back to World War II, at the end of World War II, is that's when the GI Bill happened and people came back from the war, and that's when our latest housing boom started, basically after the Second World War, when people were coming back, buying homes and living their lives. And as you can see, since World War II, we've had historically one time in which we've had a housing crash. And that, of course, was a housing crash that happened in 2008, 2009, and when we had all the foreclosures and short sales and bankruptcies, and it was pretty miserable. But since that point in time, here's where we are in 2021. Obviously, home price appreciation has been a big deal historically for a very, very long time. So if you think about it, where are we with foreclosures? And we've talked about forbearance. That was one of those big things that hit people when we started working through COVID and the pandemic and the stay at home and fear about what was going to happen to people. Are we going to go into another housing bubble in which people go into losing their homes through foreclosure? And if we go back to May of 2020, when we had 4.76 million homes in foreclosure, to today in forbearance, excuse me, we're at 690,000 in April. This is the lowest time historically since they've been keeping records. We have fewer people in forbearance than we did pretty much historically. So what's happened? Basically, we know that when COVID hit, people were offered to delay their payments on because there was a fear we were going to have another housing bubble burst, just like we did during the housing crisis. And so a lot of people did go into some of the plans that were offered to delay mortgage payments. Basically, some of these people did it just as an insurance policy because we don't know what's going to happen. I'm scared. I want to have this assurance that I have this added money because I don't know if I'm going to be having a job. Didn't know what was going to go on. So what's happened since that point in time, since those plans were put in place, we've had 37% paid out in full. Those were most likely the people who did put the brakes on making a payment and then recognized, oh, I don't need that insurance after all. I'm just going to get caught up. And so they paid everything up in full. 46% were workouts or repayment plans. So of those who entered into the forbearance programs that were offered, there's only 18% that were still in trouble. So basically loan mods, no deferrals, paying everything off in full. So we really don't have a lot of people who are in active forbearance right now. So we've learned, though, from history that prices can fall. And the more important question is if that's going to happen right now. That's hard to say. No, housing prices have gone up in such an exponential manner since the since the COVID pandemic hit. And so we do know prices can fall. What do the experts say? And this quote here is from Danielle Hale, who's the chief economist from Realtor.com. Is it going to happen? So let's look at actually what triggered the housing crisis. If you look back when we had all these very interesting, risky loan programs that were offered. So the red line here, the red is the product risk. So we're talking no doc loans. We're talking you walk in the door, we're not going to verify employment, we're not going to verify your credit history, we're not going to do anything. You just sign this one-page document, and here you go. Here's your mortgage. And by the way, do you want a HELOC on top of that? Let's throw that in as well. So the thing that led up to the housing crisis of 2008, 2009 was basically we had really risky products, but we also had borrowers, people who were taking out these loans, who also had bad credit, didn't necessarily have a job and credit and an income that could provide sufficient funds to pay their loans. So we had great borrower risk and great product risk. Since coming out of the crisis, if you look at that, the product that is offered for lenders right now, that red line is gone. We don't have risky products any longer that are being offered. Those no doc loans, all that stuff is gone. And borrower risk, way, way, way down. Borrowers are vetted. Borrowers are shown that they can actually, people check their credit history. They check their loans, their employment history. They check their bank statements. They check their tax returns to verify that the people say, this is what I have as far as income, and they make sure that's true. And so the borrower risk figure is way down as well. So lending standards are so much better than they were prior to that point of time when we had the housing crisis. Also, foreclosure activity is at an all-time low. So you look at what happened again during the housing crisis, all the people who filed each year for foreclosure. There were so many foreclosures that happened. We are now in Q1 of 2022 at a historically low figure, 78,000. That's it. That's it. That is so below the norm. It's amazing. So foreclosure activity is at an all-time low. We had so many people who went through foreclosure during the housing crisis. It's just not there any longer. Also, lending standards being tighter. We already talked about that a little bit. But again, look at the volume of loans in billions of dollars with a credit score of less than 620. So leading up to the housing crisis, we had a lot of people with questionable credit history getting loans. Since the housing crisis, very, very, very few. So this tells you that we are in a secure place as far as people defaulting on their loans. Yes, it happens for the people who do have to go through a foreclosure. It's bad, but it's just not going to be in the volume of numbers that we had in the past. So also mortgage debt is not a challenge. So if you look at the household debt service ratio for mortgages as a percentage of disposable personal income, which is basically the total quarterly required mortgage payments divided by the total quarterly disposable personal income. Again, look at the figure that we had at the lead up to the housing bubble crash. Today, look at how far down we are. Even though there's a little bit of an uptick, compared with January of 1980 at 4.4%, we're still below that at 3.8%. So this is really, really good. Mortgage debt is not a challenge. It's just not. Also, mortgage payments are virtually unaffected. So let's look at what's happening with cash out refinances. Of course, right now refinances are low, but at the point of time leading up to the mortgage crisis, remember with money being so cheap, getting another loan, getting a HELOC, all that sort of stuff, people were taking out a refi on their home and using that excess funds that they were getting out of that to fund a lifestyle, going out there and buying a new truck, going out there and buying a boat, going out there and paying for a very expensive vacation. They weren't necessarily putting the HELOC or the money from the cash out refinance back into their home through a remodel or anything like that. They were basically funding a lifestyle that they wanted. Since that point in time, look at where we are. The people who are mortgage payments virtually are unaffected now. So people who've been doing a refi, they are just not financing any sort of thing that other than their home. So people are not taking their equity out of their home. We've learned. I know a number of people who have, because of what happened during the housing crisis, have said we never want to get into that boat again. So they are doing everything they can to pay off their mortgage, pay down their mortgage. In the same time, equity has gone up so much, but they're not cashing in on the equity in their home. Instead, they're like using it as money in the bank and just not funding a lifestyle. They are just being conservative. They don't want to get stuck again. I think we're a little bit wiser having dealt with what we dealt with during that point in time. And I think probably a lot of you guys have seen that in talking with your own clients. Okay. So here's the question, what's ahead? So here is the estimated home price performance, January to January, as forecasted in Q1 of 2022. These are what the experts had said. If you look at January of 2022, the experts believed that we'd have a 9% increase in home prices across the country. In 2023, 4.74, 2024, 3.67, 2025, 3.41, and 2026, 3.57. Now, 4% price increase year over year is a normal market. What we've been seeing is been so abnormal. I guess that's a good way of phrasing it, but still seeing a price increase expected in 2022 of 9%. We'll see. Again, this is a conglomerate across the country, and some markets are stronger than others. But again, if we get back to a 3-4% increase year over year, that's a healthy market. That's a normal market. And again, the expectation is we're going to get back to that as we move forward in 2023, 24, 25. So what is the cumulative house appreciation by 2026? So what do people, this is a survey that was done, people who were on this panel, and they were looking at categorizing people as optimists, pessimists, and they did a conglomeration. So what do we think? Do we think, and these are experts in the whole thing, do they think by 2026 we will have cumulative home price appreciation? And again, optimists 46.5% said absolutely, we are going to have good cumulative house appreciation by 2026. Overall, 46.5% if you can go over time, going up over time. Pessimists said, even the pessimists said, yeah, between 2022 and 2026, there should be a net 10% increase in home price appreciation. So even the pessimists believe we're still going to see home prices go up by 2026. And again, the conglomerate believes it's going to be by 26.8% of the home price appreciation. So that angle of the curve of home prices going up. A pessimist 10%, optimist 46%. So we shall see. You know, I mean, these are people who are experts, who knows for sure. Experts are looking at a lot of different things. They're looking at trends. They're looking at, but things can always throw a monkey wrench into something. You know, a war, an unexpected, something comes out of the blue that we don't anticipate. Who knows? So this is again home price forecasts for 2022. So these were the experts we were looking at for 2022. So this is what they believe is going to happen overall. And this is redone from what we had done in January. So Fannie Mae now believes for overall, for all of 2022, we're going to have a 10.8% increase in home prices for all of 2022. All the experts, I guess the most conservative bunch is the Mortgage Bankers Association. They're still showing a 6.2% increase. That's what they believe will happen for 2022. The average of all 7 of these different experts at 9% increase. Again, that doesn't take into consideration our own personal market, but this is across the country. So everyone's still thinking we're going to have an increase of home prices across the country. So based on the current estimate for the peak Fed funds rate of 3.5% to 4%, the 30-year fixed mortgage will likely peak at between 5 and 5.7%, because that's going into the affordability aspect. There is some variability in the relationship, so we might see rates as high as the low 6% range. And this all depends on inflation and the federal funds rate, but I don't expect rates to be much higher than the current rate, although 6% is possible. So how will increasing mortgage rates impact home buying? So we'll take a look at that next. We're worried about affordability, and we're seeing some of that within our own local market. So the new data from the Harris poll shows that 84% of Americans plan to cut back spending as a result of price spikes. More than 70% of respondents said they're feeling the effects of inflation, the most in gas prices and groceries. And that's for sure. We're all seeing what's happening at the gas station. We're all seeing when we go grocery shopping how much prices have gone up. And so this definitely impacts people's ability to purchase things. You look at that, can people afford to save for a down payment? Can people afford a mortgage payment? How is this going to impact people's buying power? We're seeing the majority of inflation definitely hitting most in the first-time home buyer market. So let's look nuts and bolts, actually, what this means for the change in mortgage rates. So if you look back in January of 2021, which was not that long ago, just a little over a year ago, the average mortgage rate was 2.73%. So if you're getting a loan of $300,000, that meant a monthly payment of $1,221. That's what a $300,000 loan at 2.73% was going to be. Jump forward with the anticipated increase to 5.5% in October of 2022, the monthly payment is $1,700. So that's a difference of $500 per month. That will definitely impact the buying power of a lot of people, especially the first-time home buyers. When you couple that with the added increase of what people are paying at for gas and food, basic things we all have to have. So it will definitely impact buying power. So we look at this index. This is a really interesting index, and we've talked about it before, that National Association of Realtors has been publishing since 1990. That's when they first started doing their index. This is the idea of the affordability index, and how affordable is a home today. So remember, the higher the figure, the more affordable the home is. So if you look at the orange figures, the orange figures here, this is the year when we had distressed properties dominating the market. So you could pick up a home for pennies on the dollars to build it. We all remember when, it wasn't that long ago, 2009, 2010, short sales, foreclosures made housing super, super cheap. If you could qualify for a loan, or if you had cash, you could pick up housing for next to nothing. So that was when homes were the most affordable. If you look at where we are today, our figure is definitely down. Homes are less affordable today than they were just last year. And that's a direct correlation with the rise in mortgage interest rates. However, compared historically, going back to 1990, we're still in an affordable price point if you, again, look historically at this. So again, the higher the figure is on the chart, the more affordable the homes are. Comparing back to 1999, 2000, 2001, we're more affordable. So you have to take this all into a historical perspective. How affordable is it today historically? I mean, I bought my first home in 1980, what was it, 84? I know today housing prices or the mortgage interest rates, even if they get up to the 5.5, even 6%, that's below what I paid initially for my first home. So better. Also, you have to take into consideration that we were talking about consuming spending. So with the inflation, the average consumer is spending an additional $429 monthly for items other than shelter. So that means food, gas, things like that. Meanwhile, the average weekly wage rose just $212 per month. So the consumer is short by $217 per month. That means that the average consumer will be looking for a home that is almost $42,000 cheaper. So is our market producing cheaper homes? Not really. So again, impacting first-time home buyers, people who are looking for affordable housing. So do we have a relevant market opinion based upon these facts? So what do we think? Before I get to the next thing, does anyone have any thoughts about what I've just talked about? Because I have a couple other things I definitely, before we get to our local market, I want to show a couple of other things as well. Any thoughts on this, Scott? Anybody? Okay, if not, I'm going to get out of this and pull up something, because we're talking about across the country, the expectation is homes are going to go up in value. Yeah, it is good information. Thanks, Karen. It definitely is. But what is actually happening? And this is the first thing I want to share with you. Let me get out of this. Where are we? Oh, get out of this. There we go. Liz shared this with me. I have not seen this yet published and talked about, but this was a really interesting chart that just came out. It's from fortune.com. And I've never really read fortune.com, but they did an analysis based upon CoreLogic. So CoreLogic, which we do look at a lot, they are an expert in real estate, looking at the odds of regional home prices dropping over the coming year. And they're again looking at different markets across the country. The expectation that there are certain markets, you look at the different colors here, very high, over a 70% chance of a price dip. We're not talking about a decrease in the rate of growth. We're talking actually about a price drop. So price is actually going down. This is CoreLogic, again, looking at some data that they're using in April, looking at what's happened, how prices have shot up, and how the thought process on supply and demand. I don't know for sure what they're doing to come up with their analysis, because I read the article. I still didn't quite grasp everything. But their anticipation, there's 4 markets across the country that are very high expected to have a price dip. And among them, there you go, Bend, Oregon. They're also looking at Lake Havasu. They're also looking at Flagstaff, Prescott Valley. So these down here, but Bend, Oregon, real interesting here. And again, what they're saying here, CoreLogic categorized only 4 markets as having a very high likelihood of a price drop. When they're looking at the housing market, back in April, the company found the average market had a 13% chance of experiencing a home price drop over the coming 12 months. Now, CoreLogic says the average regional housing market has a 28% chance of a price drop over the coming 12 months. So they believe it's due to surging mortgage rates, declining consumer confidence, and home price overvaluation. So whether or not this expert holds true, I don't know. But it's the first time I've seen anybody make a prediction that certain markets are going to have price reductions in. So I just wanted to throw that out so you have that in the back of your head. And I want to thank Liz for sharing that with me, because again, it hadn't met my radar yet. So I just appreciate that. But let's look instead at our local market. So I'm going to start from the slideshow from the beginning. So we always talk about what we've done. I did this analysis before I left on vacation, so I just wanted to share with you. I look at apples to apples. So this is what Ben Premier did in April of 2022 versus April of 2021. So I can always look at apples to apples. Where were we? So we had more listings. And if you look at the volume of our listings, we had 4 more listings in 2022 than we had in 2021. But the volume, look, from 17 million to 29 million. That's a significant amount. So again, part of that is price appreciation, value of the homes are higher. We also had a 26% increase in homes that have gone in pending status, and the volume from 27 million to 37 million. So again, higher value and 10 more homes in pending status, which is great. But we had a significant reduction in our closings. I think a lot of that had to do with all of a sudden that sharp surprise spike in interest rates, the increase in inflation that started. We've all seen a slowdown in our market. We have all seen that. Things are shifting. It could be a combination of the fact home prices have got so high, again, lack of confidence, the inflation aspects. This is another election year. Who knows what, things get kind of, I'm not sure what's going to happen, so uncertainty kind of puts a holdback on some things as well. Year to date, we're up on our volume of our closings, but we are down in the number of closings. So that was where we were in April. If I look at this data, and this chart is from MLS, and this one shows, I just am doing Bend, and the Bend records of what's happened in Bend, and Bend for MLS includes Sun River as well. So you can see in April, compared with where we are, we're getting new listings. This is seasonal, and that's a good thing. Obviously we get new listings coming on board as we hit spring, summer. That's great. Active listings, more new listings and active listings, which is good. That means new listings are sitting a little bit of time before they actually go into sales right away. Listing prices starting to level off a little bit, which I think is really good. Active medium list price, yes, it's still on an uptick, but it's not at that sharp uptick that it's been at. Absorption rate, starting to see a bit more inventory. Good thing, we need it. Let's hope we get more inventory. We've been operating with less than a month of supply for a long time, and that's really challenging. Sold to list volume, sellers are still getting their asking price pretty much. In some cases, again, 102%, so a bit over asking price. Days in market, cumulative days on market, homes are still selling fast, but maybe not as fast as they were at one point in time. And again, the active, if you look here, new list volume, this is a significant thing. So if you look at what happened last year, this is the active volume. And again, this was new listings. Again, new listings were, as soon as they were hit the market, they were being grabbed. They were being sold instantly. Now we're starting to see new listings over active listings. So that means new listings are coming on board. They're not necessarily being picked up immediately. Sitting a little bit. So take that into consideration when you're talking with your sellers, especially when you're going out to get a new listing. Let them know that the market is different than it was last year. We're not going to necessarily anticipate multiple offers. We're not going to necessarily anticipate as soon as you hit the market that weekend you'll have 3-4 offers way over asking price. Try to hit the price right for the comps right from the start. And then also let them know if we are not seeing activity, we overhit the market, we need to adjust accordingly. Here is the analysis of what's happened in Bend for single family residential. Again, I look at apples to apples. So what happened April of 22 versus April of 2021. Now, again, these figures, I did this before my vacation. They do tweak a little bit during the course of the year because agents are sometimes slow to get their data into MLS, but when I did it, on the day I did it, this was accurate for that day. If you look at active listings compared with April of 2021, we're down in active listings of 50%. Again, inventory issues are still there. New listings, more new listings than April of 2021. New pendings, just like within our own market, we're selling more than we did last year. You know, I think that has to do with our brokers are working, they're getting more things together, which is great. Solds are down, just like they were within our own office. They were down. And again, I think that you have to take that back a couple of months. What happened a couple of months before? Solds, interest rates going up, inflation all of a sudden spiking, and people getting uncertain. Sold volume is actually down because the number of solds are down. But look again, average sales price and median sales price. Look at where we are with the median sales price, 767,000, up almost 18% over a year before. I mean, the median sales price is, I mean, how can any first-time home buyer afford that? I don't know. Months of supply going up. And again, in my opinion, that's a good thing. So, any questions on any of this? Any thoughts or questions? Anybody have anything?
Yeah, I'm wondering, along with everybody else, where the heck this is going to end.
You know,
it's just astounding to look at these prices. I've lost a dozen buyers in the last year.
Because they thought that market was overpriced?
They had 500,000 or 600,000, and what they can buy for 500 or 600 now, they're not interested. They're going to stay renters.
Stay renters, that's interesting. Because, you know, the one thing with renters is we talked about, well, you all know that every time you pay rent, you're paying someone else's mortgage and you're not building your own equity. So even if you're paying a high figure for a home, every payment you make, you're building your equity. Unless we do have a major price correction and a price drop in Bend. And again, this is the first time I've ever seen that published anywhere, that some experts thinking that we're going to have a price drop in Bend. I don't see that yet.
Yeah. One of the clients I've helped them buy several homes and sell several homes, and they just can't get into the market now. They missed their opportunity last year.
Is that because the interest rates have gone up?
The interest rates and the prices, the two things together killed them.
Yeah.
So they're thinking of leaving the area.
Yeah, yeah. And the thing that will definitely make an impact to people is it's got to do with our months of supply. I mean, our inventory levels. We still don't have enough inventory for the demand. Remember, a balanced market is about 5 to 6 months of supply. That's balance. We don't have that. We haven't had that for a long, long time. Coming out of the recession, you know, when we were in the recession, we had 10, 12 months of supply at certain price points, 15, 16 months of supply. For the last few years, we've been operating under 3 months, 3-4 months of supply. It's still been a seller's market, not as strong a seller's market as it's been since COVID hit, but it's been a seller's market. We haven't had a buyer's market for a long time. So until we make that switch and all of a sudden we have inventory sitting here with no one buying it, do I anticipate us starting to really moving into a buyer's market? But we all see that there are some properties that hit the market that are definitely priced maybe higher than we would expect and that we would think would fit the market. Any other comments? What are you guys seeing out there? Any other thoughts? Yeah. Hi, Cinda.
Well, on my listing in Redmond, I was really surprised the few showings we had. We had great pictures, we're competitively priced, and we had, you know, maybe 4 showings in a week. And that was getting scary for a while there.
Yeah. Did you have any feedback? Did you have feedback from the buyer's agents who were showing the property? Were their clients changing because of interest rates having gone up?
interest rates, they're holding tight, the war, the what's going on with what's going to happen to our economy, a lot of little things.
Yeah.
All put into one. And I was just like, to me, it changed awfully fast.
Mm-hmm. It did. It did. I mean, if you look at it, just a few months ago, interest rates were down. I mean, the inflation spikes is really recent. You know, that has the way inflation is right now, that's new. And we're at a 40-year high, isn't that right? 40-year high on inflation.
Yes. And it's fine line with your sellers.
Yeah.
Convince them that the market's changing, but don't be afraid of it. Buyers and sellers. That's
right.
a fine line you gotta walk.
We are still in a strong seller's market. We still are. And if your sellers are realistic on their pricing, we will get their home sold.
Yeah.
They just have to be realistic and just recognize it's not last year.
And you have to show it and get good pictures, and you have to really be aggressive on doing everything right.
That's right. That's right. Very good, Cinda. Yeah, absolutely. Yeah. I know I was talking with a buyer's agent, not within our office. There was, in this one scenario, we've been in escrow for a period of time, and during the time we've been in escrow, things have shifted. Things have started to change. So recognize and counsel your clients about how to handle things, especially when you get into your negotiations. Talking with a couple of brokers recently, in which we have sellers who are acting as if it was last year, when you take it or leave it. Take my home as is, I don't care. It's changed. There's going to be more opportunities. Also seasonally, think about what happens as we enter into summer. This is our peak selling season, April, May, June, July, August, before school hits. This is normally when people are selling their homes. And the attitude of a lot of our sellers last year was, give me multiple offers, I'll take the highest and best. You waive the appraisal, you waive the negotiate any repairs, and you make the earnest money non-refundable and released to me as soon as you get through the home inspection. There may be buyers who are willing to do that still, but fewer. A good real estate transaction, in my opinion, involves a give and take on both sides. And when you have a seller who has the mindset, well, I'm not going to give anything, that buyer may walk and go to something else, go somewhere else. So, and in the meantime, that house that had a great buyer for it may not get another buyer when that seller's not willing to negotiate. So counsel your clients accordingly that things have changed, and now that seller now knows there's problems with the home. There are repairs that need to be made that now they're going to have to disclose to future buyers if they lose the buyer they're currently with. So yes, I know some people still have that mindset, but it's a changing market. Are you guys all seeing that too? Yeah.
Yep.
Yeah, it is. Yeah, it's changing, definitely. Anything else? Any haves or wants before we break today? Yeah. Yeah, Julie?
Yeah, I just wanted to, so I do have my Ferguson Court listing. If anyone hasn't seen it, it just went live on Friday. 61092 Ferguson Court, listed at 875.5. It's technically 3 bedrooms in Deschutes style, but they converted one of those into a living space, but you could just put a door back on. 2.5 bathrooms, approximately 2,200 square feet, built in 1995. Tons of updates on 0.62 acres, plus a little shop with loft storage outside, nice big deck. So is eligible on for an STR as per the city right now on that Boom app. So I'd love to have people come through and get feedback. And then I also have a buyer need, and they are looking around the 600 to 700K range for a minimum 2-bedroom, 2-bath. The big thing for them is some room, so at least a half-acre lot with a shop, or a 3-car garage, or room to build one. And yeah, so if anybody has anything like that coming up, I would love to hear about it.
Great, thanks, Julie. I see Katherine, then we have a couple of text messages. So Katherine?
Hi, I have, and it is a townhome in Northeast Bend next to St. Charles Hospital and in Pilot Butte. We're gonna list it for $350, and there's 2 primary suites upstairs with a bonus room off of one of the primary suites that can be used as an office, a workout room. It's a nice little sizable space, this bonus room. And the downstairs is an open floor concept with a little patio. It's an end unit, so it has this really nice green space outside that's maintained. It's coming soon today, going live tomorrow. And then I have some buyers who are looking, they're starting a roofing company here in Bend, and they're bringing some of their laborers from Portland, they're moving them here to Bend, and they're looking for a 3-bedroom home to buy to house them in. So it could be a fixer in the 300s, or, you know, up to $450 for a 3-bedroom place.
In Bend? It has to be in Bend?
Doesn't have to be in Bend. It can be in Redmond or somewhere nearby where people can commute.
Great. Thanks, Katherine.
Mhm.
Let me look at the text here. Okay, Karen, do you want me to read your text or your chat, or do you want to unmute and tell everybody about it? I'll go ahead and read it. So Karen has a buyer need, new to Bend, a family of 3, looking for a nice 3-bedroom, 2-bath with 1,700 square feet living area or larger, with a nice yard, under 700,000. Some updating, okay, 90s or newer, Bend preferably. Great, great. And then Tina, did you want to talk about your Myrtlewood listing, or do you want me to go ahead and?
Yeah, no, I have a
Tina.
new listing. It's in coming soon, so it'll be active today. Great little location, Southeast Bend, 4-bedroom, 3 full baths, 2,330 square feet. It is on 0.40 of an acre, so RV parking, RV dump, single level. 2 primary suites, 1 on each end of the house, with both of those having tile showers and nice bathrooms in them. Real nice private deck off one of them. There's a living room and a family room. So really good separation. Multi-generational would be ideal. It is going active today. Going to have it open Friday and Saturday. It's priced at $848,900. Yeah, if you guys have anybody nicely remodeled, you should see the inside. It's absolutely beautiful. So give me a call, 541-419-9022. If you got any buyers looking. Thanks.
Okay, thanks, Tina. And anything else?
Yes. Can you
Yeah,
hear
hi,
me?
Colleen. Yeah,
Hi.
Colleen.
I have a couple buyers. They're looking for property in Lane Knolls or Boonesboro or Sundance, and they can go up to 1.1, 1.2, Mountain View preferred. One of them needs a primary on the main. And I have another buyer looking for a duplex in either Bend or Redmond. And that's it. Thank you.
How much can they afford on the duplex, Colleen?
They'd like to stay under 800.
Under 8, okay.
Might be tough, but.
Okay, great. Anything else, anybody?
Hi, I have a coming soon. This
Okay.
is Diana Zito. She's going through divorce proceedings, so we think it might take a month, but it's 9 acres in Bend with Cascade Mountain views, and it's a beautiful home. I've already previewed it, and we'll probably be around $1.2 million on that. So it's 4 bedrooms. Let me find the square footage. One sec. Sorry. It's on 9.5 acres, and it's 3,007 square feet and 4 bedrooms, 3 baths. So that's coming soon if you have anyone. It's a very private, beautiful home. And then I have a one on the east side that's coming in about a month as well. That's just a tiny home. I haven't priced it yet, so I'll get back to you on that. And then I have a buyer need. We made an offer way above list price, and what we're trying to find is a home in Tetherow, Broken Top, or that immediate area, or Tree Farm, up to 3.5 million. When we make a really good above price offer, we lose. I mean, there's so many people bidding, so, and that price point, which shocks me, so above market value, it's crazy. So if anybody has one coming on, please let me know.
Okay, great. Thanks, Diane.
Okay, thanks.
Yeah. Anything else from anybody else? Okay, if not, we're here at the office. Just let us know if we can help you with anything. And I hope everyone has a great rest of their day.